Good morning, good morning. Welcome to Marketplace on Hot 96. My name is Jimmy Bogo. We have an amazing show lined up for you this morning. We'll be looking at the equity markets. And to help me with that conversation, I am joined in studio by Robert Ochieng from Abojani Investment and Marshall Nyangor, an analyst from Zimele Capital. Gentlemen, karibuni.
Thank you.
All right, so I just want to get your assessment, first of all, Marshall. When you look at the equity market in Kenya, where are we?
Thank you, Jimmy. I think that's a very, very important question. Where are we? Because so many people people who are trying to understand this information, where is the market is currently and where is it going? And briefly, I will say that Kenya capital market, and in particular equity market, has been growing for a while now. And I think the players have been trying to bring in more investors, particularly the retail investors. And in terms of now the companies that are maybe listed, I would say that the number has not grown as much for the last 10 years. We have seen a very, very few companies listing, but overall it's still very, very lucrative investment. In the last 1 year, we have seen a downside of it where we had a lot of capital outflow. So many companies that have been doing very, very well in terms of their stock prices. Yeah. We saw a big decline. Look, example, Safaricom, one of our biggest player in the equity market currently. We're looking at a stock that dropped from a price of 36 shillings 3 years ago to now trading as 14 shillings. That's like over 60% drop in 3 years. Yeah. Then you also look at some big banks like KCB, Equity Bank, and all the players. They had that effect, but mostly it was really something to do with the market fundamentals and mostly to do with the capital investment, capital outflow arising from events out of Kenya. We saw a situation where for example, the inflation in the market in the big markets like the United States, was the Fed their so-called central bank was trying to control the inflation, and the result of that they raised their policy rate or interest rate. Whenever that happened, unfortunately, capital markets like ours get affected. People dump their stocks, trying to take their money to the so-called safer place. So that, in a large extent, so many stocks decline in prices. But I think that is usually not a bad thing overall, because that's present opportunity. It's what we can call it a bear market, where now people can come in and start picking stocks at very, very discounted prices.
All right, so, and Marshall, I think we'll have a conversation on when to invest in just a short while. So, Robert, I'm just looking at the number of the NSE 20 share index, particularly. When you look from about 5 years ago, we were doing about 29, 14 point something. Now, as we speak, we're doing about 1573.4. Which direction are we heading?
Yeah, thanks, Jimmy. So what I would say, like my colleague has said, is that when you look at the markets, usually they present opportunities. And there's an element of what we call the behavioral finance, the way human beings are. When the opportunities are there, people tend not to pick them. But now when they're obvious, the share price is going up, is now when everyone is coming to the market. And that is a bias known as FOMO, or fear of missing out. So when you look at businesses, what I would say, you should look at the opportunities and see, like they would say, there's the planting season and the harvesting season. So if you want to reap well, ensure that you are very active at the right time. So I would say, when you look at the indices, for example, the reason why I want us to expand this conversation to even global, the Japanese market has been in a situation whereby for like 30 years, the index traded below a certain level. Actually, it was a big celebration recently. You can see even in international media that it has gone back to where it stood at maybe 30 years ago. So that happens, and even the US market has had situations whereby there was even a crash, and the levels of hope were very low. 1929, when they had the Great Depression. So it happens in all markets, and it is said that now that is usually the right time for you to buy. But for you to buy again, now don't look at the market as a whole, but look at the individual opportunities. Like he's talked about Safaricom, the banks. So you look at the fundamentals, what are driving Safaricom, what are driving banks. So in my opinion, if you look at the Kenyan market, one of the opportunities that usually have that maybe many people are not seeing, and I can talk about it since now I've been in business 3 years, having been in corporate, is that there's some things that are very obvious in other markets, but here is now when we are developing them. So that is what gives us the upside potential. If you look at, let's say, money market funds, for example,
Yeah.
we're only at 200 billion.
This is actually when they're
Yeah.
beginning to pick up.
Yeah, that is very odd because ideally they should be bigger than banks, right? Wealth is actually what matters. It's not about transactions. So we are celebrating moving transaction from one wallet to the other. Someone who was from corporates and is now running a startup like myself, I'll just tell you, my friend, I just need money. Make me wealthy.
Yeah.
That's one of the biggest need for families. We want to take our children to school. So it's actually good that now the asset management companies have picked this and is growing. That's an opportunity. And you've seen some banks doing that. If you look at the banking sector 20 years ago, the current total banking sector assets are now over 7 trillion. Believe me, in 2004-06, they're actually lower than 700 billion. It has grown 10 times. So sometimes the mind cannot process these things and see growth. That's why you need to see how is the market structured in terms of demographics.
Yeah.
Everyone talks about the median age being 18 or 19. But believe you me, there are several banks, big names, where the median age of the customer is 40. So it tells you there's an opportunity to now bring these young people to the market. What will that mean? Deposits will grow, loans will grow, transactions and fees. And that's why we've seen that sometimes people are not understanding that it is not the sentiments that drive the economy,
Yeah.
but rather the opportunities. And that's why it is impossible to see a case whereby all the sectors are not growing.
All right, and I think
Yes.
on that same note, on just looking at the opportunities, Marshall, the question that I'm sure a lot of our listeners would want to know is, what is the right time to invest? What is the right time to get into the market?
That's actually a very, very difficult question, Jimmy, because there's usually no right time to invest, quote unquote.
Yeah.
Investment should at least be guided by some level of research. And as my colleague has said, you understand the fundamental of the company. You're not going to invest in the market as per se. You're going to invest in an individual company. So you look at that stock. What is driving it? Is there opportunity for growth? Is it currently trading at a discount, or is it trading at a premium? As he already said, he explained, we have that psychological effect of when the stocks are trading at a floor, at the bear. That's when everybody is running away from the market. Yet that's the right time to invest. But now when the stocks are trading at a premium, that's when everybody want to feel like I should not be left out. So everybody want to take a position in that particular stock.
Yeah.
So that has been a big challenge. And I think something that is becoming very, very critical, because I talked about the need for research. With this digital age, our parents back then, those ones who managed to invest, they left that role to the stockbrokers who will do for them the research and pick for them which equity to invest in. But over time, I think we are now seeing the role of social media. People look at the analysts in the Twitter, in the chatbots, in the Facebook or whatever.
They're doing their own analysis.
Yes.
Yeah.
Unfortunately, of course, most of those analysts might not really be professionals.
Yeah.
But people tend to rely on them. And some of them are even market movers and would try to rely on them and take action based on them. Of course, if you make a loss, you can't sue anybody.
Yeah.
But that's a conversation for another day. So I think the most important thing here is that if you're going to invest in whatever company or whatever stock you're going to pick, at least have some basic understanding of what's happening in this particular company. Do you understand the management and what's their vision, what's their mission, and what's their strategic plan?
Okay.
Look, for example, at Safaricom. Currently, the biggest thing they're doing is that they're trying to develop a market in Ethiopia, for example. And I think some people have even started projecting that in the next 10 years, that market in Ethiopia might be bigger than the Kenyan market. If that will come through, is another whole story. But at least you need to understand how their M-Pesa in Ethiopia is performing, what's the growth numbers, how their telecommunication services are performing in Ethiopia, and just Safaricom. You look at Equity Bank, look at KCB Bank. They're trying to enlarge or rather to go into the regional markets, trying to develop banking services in especially DRC Congo. It's a big target, but overall they're trying to expand to the African space. So once you understand that, then you put a position there. Then the most important thing, Jim, I think when it comes to stock markets, unlike other investment, this is not a place to gamble. You want to understand the company very, very well, take a position and hold for long, because it's not really, you don't want to go and put money then expect some returns in the next 3 months.
Yeah.
Of course, it can go either way. You never know, because there's some information you may never know. They just come in afresh and they may change the market. But overall, you should go with the heart that are going to invest this thing for long term, for dividend maybe return, or for capital return, and will take a while.
All right,
Yes.
now, Robert, the other thing that we normally see is any kind of information pertaining to a company has the potential to sort of change the outlook of that company. So the question therein that comes to mind is, how do you assess the risk? When you see Safaricom going to Ethiopia, when you see Equity going into DRC, how do you measure that risk and say, this is the right time for me? I'm going to bet on this gamble that this company is investing, and to know that they've taken care of their fundamentals and I'm not going to suffer.
Yeah, so like Marshall has said, what you need to look at is long-term first. And when we're looking at long-term, in my opinion, when you look at opportunities, I usually believe in opportunities I call mega trends. So a mega trend is something that is likely to persist. So when they start, those who get into them, usually they're seen as forward-looking, people who are exciting. So, but in the long run, you'll realize that it doesn't matter whether you had a phone the first day there was an iPhone, or whether you are buying it now. What matters now is that we need telecommunication services. So if you look at it, Safaricom launched operations maybe in the year 99, 2000 there. You see, so it's over 20 years now. But still it matters. We still need voice calls. So when you're looking at opportunities, you have to look at a long term. Because a company, I usually say, is like a living thing. It has a soul, and basically it relies on coming up with ideas, looking for opportunities with upside potential, and growing. So when we're looking at Ethiopia, you look at fundamentals such as how many people do they have there. If you look at Kenya, we have Safaricom alone has over 41 million customers. So it's close to saturation. You look at even Communications Authority of Kenya numbers. How does it play in Ethiopia? When it goes to banking, you look at it the same way. So you might take it for granted that even in Kenya, for example, my grandmother has M-Pesa and she's over 85. She can transact. That's not the same even in Tanzania. You'll be surprised when you look at the number of people with mobile money versus the overall population. When you go to DRC and banking that way. So you have to look at it from a long-term point of view. Then Marshall said about the fundamental, the management, their strategies, how they are approaching the market, because that is another thing. Saying that you are going to be the biggest bank and becoming the biggest bank, that totally different,
two different things. Now,
yes.
And gentlemen, I know we're fast running out of time. So the question that I want you guys to help us with is, how do I balance my portfolio?
Well, that's also a very, very critical question. I think, first of all, investment, fortunately, or rather unfortunately, today you're just talking about equity, but equity is just a small aspect in the entire investment space. He talked about money markets initially. Money market belong to a whole investment group called unit trust, or collective investment schemes, or mutual investment, where people come in together and put their money together. So apart from that, again, we talked about equity. There's also investment in debts, particularly government bonds and government infrastructure bond, and so on and so forth. And then there are still other real estate and so forth. So if you ask how to balance your portfolio, now we go back into the wider investment pool, and we are looking now at how do you want to put your money? You need to have to save money for return, but you also need to put something aside for, let's say, emergency cases, medical cases. You also need to put something maybe for if you're planning maybe a goal like a wedding, or traveling, or maybe building a house, or buying so all those ones. And that goal now will determine where you want to put your money. For example, if you're not really concerned, because the investment lies in three fundamental questions. One is the return, two is the risk, and three is the liquidity. The return is how much are you fetching from the investment you're putting aside. If you're getting something above, let's say, inflation, you can say you are well off, but of course, there's many other investment areas that might even give you more. Secondly, what's the risk of your investment? That answers the question. If you're saving maybe for emergency, you cannot put your money or other assets in a risky venture. Let's say like stock. You can't really can't put money in stock, then say that's your emergency. In case you are sick and wherever you invested, okay, I don't need to over-explain that. Then again, now if there's the return risk, then there's the liquidity. Liquidity really talked about you being able to access money in the shortest time possible whenever you need it. And now it's come to balancing. If you're putting money for liquidity, there's high chances that returns will be lower. And if you're putting money, and if you're looking for higher returns, high chances that money will not be accessible in the shortest time possible. So all that is about balancing. Now, if you ask the question now, how do I balance my portfolio? The shortest answer will say that you need to put something aside in all those categories I've talked about. Put something aside in, let's say, in a money market, which doesn't give the highest return, but it's the least risky
The least
of all
risky,
them.
yeah.
So put something there. If it's for emergency, or if it's just some money that you need to access any other time,
Yeah.
you need then you put it in money market. Then you also need to put something in the extreme side, which is the riskier side, which is the stock market or the equity market. And that one now you looking at the returns. If you've done your research, you've talked about it very, very well, then you know this, let's say this company A is likely to grow in the next 4 or 5 years.
And it actually
Yes.
tests your patience. Now,
Yes.
Marshall, so I know, again, Robert, just in about a minute, I want you to help us understand. So when you look at the 20-share index currently, and you look at some of those counters, where are you safe putting your money? Going into 2024, which counters do you see a lot of potential in?
Yeah, so it's quite exciting that we now have positive sentiments about Kenya. When we were coming into the year, we had a lot of negativity. And something that we need to look at fundamentally, an investor is basically someone who believes that tomorrow is going to be bright.
Yeah.
If you don't believe that tomorrow is going to be bright, there's no need to invest. You only invest because there's some opportunities that we are seeing that will come to life. So the most interesting thing, again, when you look at this market, we have some share prices that are already up like 14%, 15%, some banks. When you look at December now, people thought that government was going to default on the Eurobond and stuff like that. We've seen even where the dollar is. I saw someone in Bloomberg Terminal. Our currency is the best performing year to date. Yeah. Can you imagine globally? So those are very positive sentiments. And when there are positive sentiments, the sector that you benefit the most is the banking sector. Again, when there are negative sentiments, they're the ones who are usually affected the most because money is a very emotional thing. So I'd look at banking sector, but again, we'd be cautious on non-performing loans. That aside, there are some share prices for banks that are actually lower now compared to 2014. If you look at it that way, the balance sheets have grown, the valuations have grown. They're investing in what we call expansive market. What do I mean by expansive market? An expansive market is a market with very many people, but probably we've covered only 5% of it. Everyone talks about SME financing. Abojani is a small company. We definitely need payments. So we need to look at which banks are investing in payments, which banks are investing in empowering SMEs, even having session for us as SMEs to deal with things like taxation, tax amnesty. Those are simple things, but they can change the lives of SMEs. So which bank is being seen to be working in these areas, whether it is young people. We talked about the median age being 20, yet several banks, the median age of their customers is 40. So which bank is attacking this market for young people who will grow with them? Yeah, so it's very, very important to look at it that way. Insurance sector, again, it has been not performing well in the stock market, but now we are seeing some insurance companies like CSC, Britam, recovering from their financial performance. So it's always from the fundamentals first. So if you look at their revenues, profits, they seem to be growing. And when you look at other sectors, we have companies such as Kabasid that are in a very interesting space. What opportunities are you seeing there? So Marshall talked about diversification in terms of asset classes. When you come to the stock market, again, you have to diversify, right? So you can't have only banking stocks. And even in the banks, you can look at banks that are going to the region, you know. And after that, look at insurance sector if there are interesting opportunities there. Telecommunication sector, again, it has a digital element. And given that SMEs, they had to be digitized. You know, we need as many SMEs as possible with digital payments because that's what customers want. You go to some places and the SME is insisting that for them, you can't pay digital. That SME has a problem of not doing what customers want. So what will happen? The SMEs who are doing what customers want will grow. So it means that companies that are supporting the payments, helping SMEs with the bookkeeping, they're likely to grow over time. So you need to look at sectors, whether it is the agriculture sector, whether it is the insurance sector, manufacturing sector, we have the likes of BAT, EABL, and then you create a basket of wealth. And Marshall said that you should do research. Research is basically to put yourself in a position where you're likely to succeed. If you don't do any research, it simply means that you're throwing darts on some board and expecting magic.
And expecting something that will actually stick. Now, unfortunately, gentlemen, we've run out of time. That is all the time we have. And of course, I was speaking to Marshall Nyangor from Zimele Capital and Robert Ochieng from Abojani Investment. Let's do this again next week, same time, same place on Hot 96.